Rachel, are you ready to go?
I'm ready to go.
All right, welcome everyone to the Building and Pricing Advisory Services webinar. My name is Ben Gabriel. I'm the Director of Firm Experience here at Collective, and with me, of course, is Rachel Dillon. Rachel, do you want to introduce yourself real quick?
Yes, I have the privilege of working in both Collective by DBA and at Dillon Business Advisors. At Dillon Business Advisors, I spend a lot of my time explaining our services and delivering pricing to prospects and clients. So that makes it, I think that gives me a little bit of experience to be able to share today.
Awesome. Tons of experience. So, all right, Rachel, we'll go ahead and get after it here. I'll do some of the intro, everybody, and then we'll get moving. So, session is good for 1 hour CPE. We'll ask 4 polling questions. Please answer 3. Got to answer 3 to be eligible for CPE. There is one handout in the webinar chat panel already. It is a PDF of the slide presentation. And then Amy is going to drop in a pricing goal calculator spreadsheet as well, which for some reason I was having a little bit of trouble doing, getting a weird error message in Zoom. But that's okay. We'll get that squared away. I'll have that up on the screen momentarily anyway. Please ask questions. Christine, Marcus, and Amy are behind the scenes to help answer questions as well. You can do that through the chat, or you can do that through the Q&A panel in the Zoom. And then finally, we'll have a survey that you'll see up on the screen when you close out of the webinar. So that's a lot of the, that quick background there. 2 main learning objectives today: identifying best practices for building client accounting and advisory service plans. And then part 2, our second learning objective, is list recommended pricing strategies for effectively setting client accounting and advisory service package fees. So those are the 2 big things that we're going to talk about today. Here are those resources that I was talking about: the slide presentation and the pricing goal calculator, which I'm going to share on the screen in a second, and we'll have that uploaded into the Zoom momentarily. This is the pricing goal calculator that we're sharing. Rachel and I will talk to this in a little bit more detail in the second half of the presentation, but you'll be able to download this out of the webinar chat here in a little bit, and we'll talk about it. But you can enter the cost, your cost to operate your firm right now. Set a profit goal, with a profit margin number in there. Enter an ideal number of clients to serve. We have the number 150 in here. Rachel, I think you'll talk a little bit about where that number comes from and the idea there. And ultimately, it's a very simple calculator, but it calculates a base monthly pricing fee, a base bundle fee. So that's something you'll be able to pull down. We'll talk about a little bit later. Here's the agenda. First part of the session, building service plans. Second part of the session, pricing strategies. Rachel, so far so good?
So far, so good. Yes.
Okay, so here's where we're going to start, which is a definition of advisory.
And yeah, Ben, you work with a lot of firms through mastermind groups, through one-on-one advisory. Give us your definition, or maybe you and your assistant's definition of advisory.
I think Amy found this definition from last time, and it remains pretty solid. It came from ChatGPT, so thank you, ChatGPT, right there. But, advisor, I think in our world here is with all the collective knowledge and experience, we don't, at our firm, Rachel, but also at all the folks that are tuning in with us today, you're taking that experience and that industry knowledge and that perspective and layering it on top of that information that you may be gleaning from the client in terms of their numbers, their accounting, their tax, and you're giving advice, meeting with your clients one-on-one and giving them advice about their business or about their financial situation based on your knowledge and experience. Is that fair, Rachel?
I think that's fair. For us, when I'm explaining it to prospects, which may be a good or bad way to explain it, but I do let them know that advisory could encompass anything that's keeping the business owner up at night, right? We want to hear what are those things that are like heavy on their mind, important to them, and then use the financial data that we have to help them move forward confidently. So whether that's a decision they need to make, if we can introduce them or they need to speak to like another related professional area to help them with that, or if it's something that our team can provide guidance on, but really just want to know what's important to them and their business and their, families' financial goals, and then how can we help them along that path.
Great. So we have a definition or idea and experience, Rachel, and probably everyone in the room can relate to that. So we've got that definition under our belts, and most folks, like I said, probably agree with it. Oh, let me go back real quick. I wanted to mention you and Marcus on the Who's Really the Boss podcast. It was last August. I had to go back and look, but last August you guys did a podcast episode that's pretty relevant here. So if you're not listening to the Who's Really the Boss podcast, you should be, or at least you should check it out. And if you want to check it out and you haven't listened, go back to the August 2024 episode on Inside the CFO Advisory Service Meeting and check that out. So plug for the podcast, Rachel.
Yeah, that's awesome. Thanks, Ben. And also in our collective community in the resources section, there's a CFO like 5 points or an agenda for a CFO meeting. So there's that resource available in the community resources as well. So if you're a member and you're already in there, you can listen to that podcast and grab that agenda of 5 things that are included in every CFO meeting.
Perfect. Okay, so we've got the definition for advisory down. Amy has the files shared through the chat. Thanks, Amy, the PDF and the spreadsheet and everything. So the first big part of our session today is on building service plans, and that's where we're gonna go first here. So let's talk about that. And Rachel, I'm gonna kind of turn things your way. We'll build this out a little bit, but if I ask you at DBA, how do you start putting together service packages?
Yeah, so we started looking, and I'll start in the more recent time period versus like back in 2011. But every client that comes into DBA, we started looking at what do we want to provide to them. And the way that we decided on that was, one, what do we like to do? When I say we, I exclude myself. I am not an accountant, so I'm not providing any services. But we, as in Marcus and our accounting team, tax team, so all of our team, what is their skill set? What do they enjoy providing? And then probably most important, what is valuable to those small businesses? Or if small business isn't your ideal client, to your ideal client, what do they value? What would be helpful to them? What will they pay for? So that's how we started building packages that we would offer.
So, before I even shared that first base service plan box up on there, what do you want to provide? What do your clients find value in? And what is your team good at providing? Putting those 3 things together, right? Or putting those things together.
Yeah, absolutely. So figuring out what are we going to provide for every single client. This is like at a minimum, you're receiving these services from our team, or we're going to give you a great referral to find the services that you want elsewhere.
Okay, so there's a door on the left-hand side here. So, in order for a client to walk in the door, so to speak, and become a client at the firm, we're directing them immediately right to a base service plan. So this is the starting point for building that service package or building that offering that the firm is. So what is the base service plan, Rachel?
Yes, so at a minimum, we're going to provide monthly bookkeeping so that we can provide tax preparation, planning, and answer questions for those clients throughout the year. So at a minimum, we're going to provide monthly bookkeeping, and we're going to provide tax preparation service to those clients. And then at least 1 advisory meeting per year.
Okay, so just so I'm crystal clear then, and hopefully I am, these are the services that you want to provide and are going to provide to each and every monthly client that comes in the door. So in a way, they are not negotiable. This is our base plan. Everyone is going to start here. Is that fair? That's the ideal?
That's correct.
Okay. So base plan. Now, step two here in building service packages or building out your menu in a way is our add-ons. So can you talk a little bit about what add-ons are?
Yeah, add-ons are services that clients may or may not need. They're also services that have a lot of variability. So services like payroll, like sales tax, like bill pay. A client may or may not want us to do their accounts payable. They may have it under control. They may have a person that's responsible for doing that in-house. And so we might not do that for every client. Alternatively, they may want us to do accounts payable or bill pay, but one client may have 50 bills or invoices that we're looking at, while another client may have 150. So pricing those exactly the same or just lumping that in with our base service would be really hard to stick to, like a price range or a set price per month to be able to clearly communicate to a prospect. And so that's why we make sure that those services that may be different for each client, whether it's different in need or different in amount. Sales tax would be the same. Someone may have no sales tax in one state, or sales tax in 40 states. That's not going to be, we don't want to set ourselves out to say it's just included no matter how many states you have a filing requirement.
Got it. So the base plan is things that you're going to do for everyone, and add-ons are going to be things that the business may or may not need. And if they do decide they need it, or they do decide they want DBA to do it, those are going to be priced out separately. Now, are you going to bundle that into one fee ultimately if they do sales tax and payroll with that? Just to be clear.
Yeah, absolutely. That's going to become a conversation in our sales process of determining what are the things that they need. And then we actually have some pricing and calculators on our website at dillonadvisors.com. But they actually have calculators that they can go in and put their number of employees and see what the payroll cost would be. But at the end of the day, at the end of the sales process, we're going to have one monthly fee that incorporates their base package that they've started with, plus any add-ons that they've chosen.
Okay. So I'm going to bring just two boxes up here at once here, and this is what we're calling second level, increase in touch points, advisory, and then third level, even more touch points, advisory. And we're going to look at some things on the DBA website here to get a little bit more specific, but can you talk a little bit about what are those touch points, or what are those frequencies that those touch points occur at?
Yeah, for us, we set that base service plan at the minimum that we would do, right? And for us, advisory and relationships are important. I believe that when a client comes to a CPA or a professional accounting firm, they're looking for more than the commodity of the bookkeeping or the tax return. They're expecting, whether they know how to communicate that or not, they're expecting some advice. They're expecting some proactive planning or strategy to be incorporated into that work, not just having it done. So what we did at the first level was one touch point. And then for our packages, we have 3. There is some psychology around that. A lot of times humans will choose the middle package, whatever it is in any scenario. I think it's because it's like it's the safe one. It's not the least amount or the cheapest or whatever, but also it's not the most expensive or the most extravagant. And so I think there's a lot of psychology around people naturally leaning in towards a middle package. And so our second level, we increase the amount of advisory. And that's just dependent on the client, what they need, what their business needs, and how often they want to talk through that kind of business or tax strategy with the client CFO at our office. And then the third would be even more. So we go from a quarterly touch point to the third level would be a monthly touch point. And so again, that's really dependent upon the business owner and where the business is at that point, kind of their stage in their business, how often they're wanting to talk with our team and meet with their client CFO.
Okay. So base service plan, add-ons, and then going forward, you could add a quarterly touch point or even potentially a monthly touch point advisory wise. Does that make sense? Is that right?
Yeah, that's
Okay.
correct.
All right, we're gonna do our first poll, Rachel. So I'll go ahead and take a breather for a minute or so. Here comes poll number one, everybody. So remember, gotta answer 3 for CPE. So first question is, do you have a base service plan that you consistently sell to new clients? So either yes, kind of, no, or I don't know. And I'll leave the poll up for a minute. And Amy, thank you. And Christine and Rachel, thank you for or Christine and Marcus for keeping an eye on those questions. Just a few more seconds on the first poll, everybody. Please answer it. If you haven't, dive across your desk to hit your keyboard. All right, I'm going to close it up. And so Rachel, here are the results. So majority of the group is in the yes bucket, and certainly some kind ofs, which maybe means, you know, we're working at it. And then a few no's here. So I'm going to stop sharing. So Rachel, this what I've got up on the screen right now here, everybody, is just off of the DBA firm website from the past. So Rachel, can you talk a little bit about what this chart was on the DBA website in the past, or what what this used to represent?
Yeah, before when we first started transforming from mostly tax projects and hourly, if we did any hourly or if we did any accounting like bookkeeping or a consultation, it was hourly and just scheduled maybe as needed, all billed kind of after the fact at the end of the month after the work was done. So when we started transforming to a monthly recurring revenue model and an ongoing service model where we bundled services and were able to really start building relationships with clients and providing the advice that they were expecting from that once a year tax return. We really put it into something that we could give the clients what they were really wanting and expecting with our office. And so this is where we started. We started with the base level of bookkeeping, tax, and advisory. And then the second level was to add on payroll. And then the third level was really to add on bill pay. And so if you were at our base package, you had accounting, tax, and advisory. The second level, you added on payroll, and the third level, you added on bill pay. What was hard there was the frequency of touch points for that advisory. When was that going to happen and how are we going to charge for that? But even more so, it was the communication even internally of how often are those touch points and how do we differentiate if everyone's on this base plan or everyone's on the second plan. How do we differentiate between how often we're meeting with them and make sure that we're keeping up with getting them the deliverables or the calendar invites of what they need? The other part was pricing, because Marcus does all of our pricing and I deliver it. For me to give estimates and kind of, when the prospect would call and immediately ask, well, about what would this price be? I would really have no idea what to tell them because so many factors were involved, and adding on that payroll didn't just mean add on $200. It really depends on, well, what does your payroll look like? Are you bi-weekly, semi-monthly, every week? Do you have 500 team members or 5 team members? And so there was just a lot of variability. There wasn't much clarity or even predictability for me to figure out what their price might actually be when we were starting from here. So it was pretty hard for I would say even Marcus to do pricing here. It was just a lot of like trial and error, guess and check. And then for me delivering it, it was very hard. I had no idea what he was going to come up with. And our team, it was a little hard to deliver the services and knowing exactly what every client was getting and then making sure that we were delivering that on the right schedule.
So this, Rachel, this, what we're looking at here, part of DBA's evolution in terms of packaging, pricing, and selling, and maybe what it sounds like you ran into a little bit was there was still hard challenges in pricing it out to people and in the consistency of being able to do that. Is that right?
Yeah, absolutely.
Okay. So continue forward in the evolution now. So we're continuing forward in the evolution. And for folks that are following along, you can go out to the DBA Dillon Advisors website if you want to, and you can see what we're showing up on the screen right now. You can see that on your side if you go to the website. And we are hiding just a couple things on the screen right now, some pricing and down at the bottom, there's an implementation fee that we'll talk about here. But we just wanted to keep the focus now, Rachel, on the evolution to the current packages and way you've done things, which you talked to that a little bit already, as well as the add-on. So can you talk a little bit of what you've evolved the packages to?
Yeah, absolutely. So even in the naming of like our base plan, we call it essential. Like this is what you need as a business owner. Um, one, to work with our office, but two, to help your business thrive and grow, right? Not to piece it together in like a wish and a prayer for your business, but this is kind of what we find is a minimum starting point for a business that's definitely looking to grow or sustain its activity. And so we start with essential. For me, I'm able to say that pretty quickly and easily. It's bookkeeping, tax, and advisory. Our base package does include the tax return for the business and one business owner. And so what we have set out in the essential plan is everything that is included at the starting price that we'll talk through later.
So the essential is your base plan, right?
Yes.
And in that base plan is when I see advisory, is that an annual advisory meeting? Is that what that is?
That's right. So our base plan means we meet with the client once a year. And that meeting isn't set to a specific date for clients who want to meet once a year, but most of the time it's either near the year end for their tax projection and talk through, how their year ended, what they have coming up for the next year, or potentially right after their tax return is done, depending like if they're a new client, it may be right after we complete their first tax return or right after they onboard with our team. So annual meeting, it is only one meeting per year. So once they use it, the rest of the communication is really just going to be questions back and forth, maybe through email with a team member, but a big sit down planning meeting, 30 to 45 minutes in length, that's just going to happen once.
Got it. Okay, so that's the base plan. So I'll skip over Premier, Elite, and Plus right now, just on the screen, and just go over to additional services. So the additional services are the add-ons. Is that right?
Yeah, absolutely. So we have sales tax, payroll services, bill pay, and that's all determined during the discovery phase of like the sales process of determining who are they currently using, do they have that requirement of needing that service, and then determining what the price would be. So we actually have calculators for each of those because the way that we price those services are like in increments or in ranges. So if they have 0 to 10 team members, then payroll starts at this price. And for every additional 5, it adds on. Or sales tax, it's a certain price for every state, and we just charge per state. So we can pretty easily start calculating up what they should expect their budget to be to spend with our office.
Got it. Okay, so now coming back over to the plans, Premier and Elite. So I'm seeing that as a second and third, and Plus. We might call it Plus custom now. But if we talk Premier and Elite, how do you determine, if someone is gonna need more or want more? Let's say need more than the base starting package.
Yeah, I am biased and steer people always towards the premiere to the quarterly. But as far as delivering or explaining this service package to a client, all that's changing is how often they meet with the client CFO. So how often they have those sit down 45-minute meetings with the client CFO where they're talking through their business goals, the strategies, what they need to do to adjust to continue progressing on those, and then any tax planning or strategies that they may be able to incorporate are often discussed just because business owners are usually very interested in what are the tax implications of this decision, or how can I just pay less in tax? So that often comes up in those CFO meetings. And so that's nice to be able to remind the prospect of, if you're doing this on a quarterly basis, you have plenty of time to adjust and change course if your business is changing or if your goals are changing for the business. And then also to implement any tax strategies before the end of the year, where it's not like you're trying to rush around with your hair on fire in December trying to do things before 12/31.
Got it. Okay. And then just the plus, or again, I think maybe we call it custom now, but what's the last package for? What does that do for you?
Yes, absolutely. So we decided that we wanted pricing on the website just to kind of set the expectation before I got on the phone or video call with the prospect, that they would already have an idea of the amount of investment it will be with our office. So we went ahead and put pricing on our website. Now, if you put pricing on your website, whatever number the prospect sees, that's what they think their price is, no matter what. That's their price. And so we have a fourth column that allows us to really take into account if the business is different than what we would price at our base or minimum pricing. So if there are multiple locations, if there are multiple entities related to that one business, if there are multiple owners, or just a complex industry maybe that has class tracking or something different, we wanted to give ourselves room to not have to stick to just whatever that price was, because we know all small businesses are different. There's not two that look identical. And so I think that's where a lot of people have a hard time starting with, like, how to set a price, is because every client looks different. And that custom column really gave us the flexibility to be able to offer higher pricing if the client warrants higher pricing because of the time it's going to take from our team.
Got it. Kind of creates a little bit of space or wiggle room for you to have some of those other conversations and arrive at a different price potentially. Okay.
Yeah, absolutely.
Okay. Um, Great, Rachel. So you can see the evolution, and for DBA, this is coming right off your website. So the evolution is client facing or public facing, so people can see, they can see things as they come in the door. Okay, back to the door. All right. So I'll summarize things here just a little bit, everybody, in terms of building service plans before we go on to really the second half of our class here and talk about the pricing side of things. So get really clear on what you do. We talked about that. DBA's evolution from that first go around on their website to wanting to be a little bit more clear, helping the team with that pricing conversation and people knowing what they can get, what's included in the base plan, what's an add-on. Make it make sense. I think that I like saying plain English, but you want the client to be able to see it and read it and be like, okay, I think I know what that is, without having to necessarily maybe sift through other things. Create the base level package. That's what every monthly client's going to buy when they come in the door. Add on the add-ons, things that people may or may not need, like payroll, like sales tax, like bill pay, like Rachel said. And then one thing that we didn't quite talk about, Rachel, and maybe I'll throw it back to you for a second here, but remove services from your website that you don't do. What does that mean?
Yeah, so when we originally started with the bundled services, which is very helpful. So that's not something that, our friends in here are doing, of having that bundled service and like productizing. So giving like a product name to each service package so it's easy to talk about, easy for people to remember, and then also a common language for even internal team to understand. So when we first started, some of the services that were bundled in that package, we weren't actually doing. So, or we were maybe doing it for one client, but that's not what we were wanting to focus on. And so a couple of the ones that I remember, I'm not looking at it right now, but like pension remittance, we could do it, but that's not something that we like set ourselves out to do or did for every single client. Forecasting and budgeting, while we do talk through and provide that, it may look different than someone else's definition of budgeting or forecasting. And so those were the things where the interpretation, I think, depending on people's kind of prior knowledge and experience coming in with what that meant to them, those were some of the things where that's not necessarily what we wanted to focus on. And if that's the reason someone came to you because they saw that you did that, other things, we no longer offer audit services. We actually don't take an annual only tax return charged only once a year. We don't take that. So we took those types of things off of our website because that's not who we are trying to attract. So we don't want someone coming to our website for audit, seeing that, you know, once upon a time we did that, or we have the ability or skill set to do it. But then when they talk to me, they're like, well, it doesn't sound like you do that at all. So just removing those things. If there's anything in a package maybe that you've been using for a while, but you don't really do or just don't want to do or grow, then we would recommend taking it off the website. Not saying that you can't provide it to clients you're doing it for, but just if you don't want to grow it, remove it from the website.
Yeah, that keeps things, probably keeps things simpler for people coming in the door and maybe makes things simpler for you as you're explaining it to people.
Yeah.
That's
Tim has a good question for us real quick
yeah.
while you pull up the poll
I'll put the
there.
poll up. Go ahead with that question, Rachel, please.
Tim asked about the breakdown of how many clients are on Essential, Premier, and Elite. They're probably all on custom, Tim, just kidding. But as far as number of times that they meet with the client CFO, majority, I would say high percentage, like 75% or higher of our clients are probably on that quarterly. Ooh, Marcus is good, 50% on quarterly. It feels like a lot more than that because that's the one I always sell. But Marcus threw that in there. Essential 40%, Premier 50%, and Elite 10%. Marcus to the rescue on the math. Thank you. But when I'm selling, it's always to try to get them into that middle package because we think that's a good rhythm to stay in contact and up to date on what the business owner is thinking. So not all, every month we see what's happening transaction wise, but also to know what's going on in the business owner's mind. We love to stay in contact and communication with them.
All right. Thanks for chiming in, Marcus. So let me end the poll, everybody. That was poll number 2. Here's the results. So do you list your service plans on your website? About half the group does, half the group doesn't, and the balance is we don't have service plans. So that was poll question number 2. We'll have 2 more polls, everybody. And then Rachel, so let's go on to, we just talked about service plans and putting those together. So in the second half of our class here, let's talk about pricing strategies. So that's where we're going to go from here, everybody. So let's go into it, and we're going to start with the do's and don'ts, but I guess technically we're going to start with the don'ts. So Rachel, you know, in looking at some of those don'ts, and there's 3 don'ts up on the screen, I'll put the do's up in a minute here. What are some of the things that you guys have learned?
Yeah, and I love that we started with building those service plans because until you know what you're selling, creating prices for that is hard. So I love that we started with that, even though pricing, I think, is the harder part where we all want the answers and the simple formula. So some don'ts: don't charge by the hour. I'll tell you my perspective as a consumer. We have some relationships that are by the hour, and my expectation of how long it's going to take them is always way less than what it actually takes them. So every time we get a bill that's hourly, I'm like, and just wondering, like, should it have taken them that long? Could someone else have done this faster? I'd rather just see a total amount and know what it is. I don't care how long it took in between. It's just, what is the amount and am I willing to pay it or not? So that may be a little bit of how we arrived there, but I think a lot of people may be in my same opinion on that. Don't discount the monthly service. Hopefully your monthly service is ongoing for, 5 to 7 years or longer per client. And so discounting that and then going back to the client to remove that discount, I would say would be a little harder. It's not impossible at all, and a strategy that could be used, but we would recommend don't discount the monthly service. There's other places you can show a discount to show that you're working with the client and trying to help them and make the services work for them. And then the last one is don't include technology fees. We learned the hard way. In the beginning, we wanted to make it very simple for clients. Everything that you need for your accounting, we want to bundle it all in. That helps you with your cash flow and your planning, and you know exactly what to expect. These are tools that we use, so we'll take on the cost and just include it in. We use QBO, and the price increases were pretty hefty and pretty quick. And so us going back to the client to increase prices, that was hard because now we're having to increase it enough to cover the technology, not just enough to cover like inflation or our team or their growth. It was just adding another layer. And so what we know, all of us, we have subscriptions to all kinds of things, and everything has a monthly subscription fee. And so just letting the client know that they are responsible for that subscription fee up front. Also, it just helps them to understand that that's their data and their file. And if for any reason they ever had to go anywhere else or discontinue services with us, they have full access and full rights to that file.
All right, so don't charge by the hour, don't discount your monthly service fee, and don't package up the technology fees in there. So let's go on to the do's, Rachel. What have you learned here? What can you share here?
All right, price it monthly. We love that. We love the fact that both us at DBA and the client know exactly what to plan for, what that monthly amount is going to be. We don't like to send surprise invoices or extra invoices, so we try to do a really good job up front in the sales process to include everything that they would need within that monthly fee. So that's what I would say about price it monthly. Determine the market value. We did this a few different ways. And one of those was secret shopping. So we have like an outside consulting company who helped us secret shop. But another way that we've determined market value over the years is just price test. So offer it and see how many no's, like what the rejection is. We typically price test when we're at capacity or above capacity with our team. So it's not a big problem if that client doesn't sign on or that prospect doesn't sign on, but a couple different ways to. Another great way of market value is talk to your peers, friends who are in accounting. What are they charging? What are they seeing in their area? But could definitely be very dependent on where you are located.
Yeah. What about charging an onboarding fee? We're going to talk about some specific pricing in a second here because we'll go back and share the current DBA service packages with pricing. But an onboarding fee, or we call it an implementation fee. What does that mean, Rachel?
Yeah, so for us, what we found, it was out of necessity that we needed to start charging an onboarding fee because of the amount of time we were spending on brand new clients for the first few months, right? Not for the first few weeks, but for the first few months to where we might not become profitable on that client for up to a year, depending on what all was involved in that onboarding. But what I also found, and again, I'll just remind you, I'm the one delivering these prices to all of our prospects. Nobody really pushes back on the onboarding fee. They may push back on the amount, but they don't push back on that there is one. They're used to it. Every time you start a new relationship or ongoing service, there's some type of a setup that needs to take place. And for us, for our team, what we're trying to do is optimize their account. That's what I'm selling, right? That we're not just going to pick up and keep doing whatever they've had in the past. We're going to make it better. And so there's time and effort and work that has to go into that. So that's one thing. Charge an onboarding fee. You can determine that price, but don't give it away, because there's always going to be more time upfront than hopefully in your ongoing service.
Got it. And then, so determining the availability of time needed internally and correspondent to price client pays. I see that as if there's more touch points with the client, we're spending more time with the client. Certainly we want to price accordingly. Is that right?
Yeah, and I would say too there, if you have, we said don't charge by the hour, but if you have hourly billing rates, use that to help you start determining based on about how much time you think it should take each month, and then use that to help you calculate what is your monthly fee going to be.
Got it. Okay, two more do's. So build out the right team and set a goal for where you want pricing to be. So what does build out the right team mean?
So making sure that the team and the clients, I would say, match. We don't want to bring on a client that only one team member could work on. So if that client is so complex or needs that much attention to where we're not really like a fractional or an outsource, but we would be almost like they need us every day. And so it would require one team, but really making sure that you have team members that have the skill set that matches the services that you're providing, and that you have team members maybe that are at a lower billing rate that can do some of the work, rather than maybe your highest billing rate doing all work for a client, no matter what the task or responsibility is.
And then set a goal for where you want pricing to be. We'll save that one for a second, because we're going to take a look at our calculation, which that spreadsheet is out there. We'll take a look at that calculation in minute 4, kind of looking at what that sort of base price should be. So let's come back to that one, Rachel. But before we get there, those are the don'ts and do's. This is the same slide that we had up before. Just a couple things are unhidden now. The pricing is unhidden. Rachel, $1,500 a month for the base essential plan, $2,000 for Premier, $3,000 for the third level elite. And like you were talking about, the plus area says custom, meaning there's no price on here. And then the other thing, and you talked about it a minute ago with the onboarding fee, was the implementation fee of $7,500. So could you talk for just a minute about, we're advising folks, hey, don't discount your monthly rate, don't discount your monthly fee. But it sounded like there was some wiggle room, so to speak, on the implementation fee of $7,500. Can you talk about what that means, or how you could use that wiggle room potentially?
Yeah, I really like that, using the implementation fee as the lever if you're going to offer a discount. So if a prospect, you think they're pretty certain that they would sign, they're okay with the monthly investment, but the implementation fee kind of makes their eyes wide, because ours is $7,500. So it's a one-time fee. So if we discount that one-time fee, we still maintain our regular monthly service fees for the life of that client until we do a price increase. And so we'd much rather take a discount off of that implementation fee. Anything you can get as an implementation or onboarding fee is better than nothing. So any amount. The prices that we're showing right now is not where we started. And I'll tell you, I was delivering those prices back in 2016, 17 of $600 a month, and still just as nervous as to how that they would be received from the prospect as a $1,500 a month price point. So just know that we didn't start at these prices. These are where we have arrived. And so because we were getting close to capacity with our team, we could start price testing. And because we are super responsive, and I think mostly, and with our NPS scores mostly, exceed client expectations, we're able to offer this for the service that we provide. With the implementation, again, most business owners understand that there is work and they do want something better. That's why they're leaving their old provider. So they do want you to really take a look at and review whatever had been going on previously so that you can make it better for them in the future. So the implementation fee, we don't get a pushback that there is one. Sometimes we get pushback on the amount that it is, but not necessarily that there is an onboarding fee.
Okay. Awesome, Rachel. So I'm gonna keep us moving. We've got about 15 minutes left. We're doing great. I'm gonna put our third poll up on the screen, and I know Marcus and others have been working hard on answering those questions as they've come through. So thanks so much, guys, for doing that. So here's poll number 3, everybody. Do you show pricing on your website? Either yes, no, or I don't know.
I'll say something funny as people are putting this out. We put that pricing on there so that people weren't surprised by the amount that they would see. Most of the time when clients come, they're expecting just a price for a tax return or just a price for bookkeeping. And so when they see that amount, sometimes it's surprising to them. Even though we have it on our website, I would say less than 50% have seen that before I talk to them the first time. So often I'm still pulling that up, showing them where it is on our website. So I'm just sharing my screen and showing them exactly and talking through each package, which that makes it nice too for whoever's delivering that to be able to have that in a visual format, and then also for them to go back and reference.
All right, so I'm gonna end the poll, everybody. Here's the results. So about a third of the room does have their pricing on their website, Rachel, and 2/3 of the room does not have any pricing on their website. So, all right, that was poll number 3, everyone. So, Rachel, I'll bring this all up on the screen here at once. And this is really right off of that spreadsheet that you can pull down off the chat, everybody, our price calculator goal. But Rachel, I brought the spreadsheet up at the beginning, and really how this works here is you're taking, the cost to run the firm over the year, then adding onto it, the margin that you would like to achieve or like to make. And I think we suggest in the spreadsheet starting in the 30 to 35% range. And then you're also plugging in the number of clients that you would like to work with. That is a plug number there. And Rachel, we have the number 150 up on the screen here. So can you talk a little bit about where that 150 number comes from before we get to that, base package price of 1,500?
Yeah, I think it comes from Marcus just always says that number. But honestly, he read or learned about Dunbar's rule or Dunbar's principle, and it's really just saying that you, as a human individual, you can't maintain an infinite amount of close relationships. There is a level of like diminishing returns as you start adding more relationships, and so 3 to 5 close friends, and then it kind of goes out from there on the number of relationships you can maintain and at what level. And beyond 150, it really does start diminishing the level of relationship and the amount that you can actually know a person beyond that, and really maintain that relationship of inequality. And so that's what we look at. What we tend to think about too is if one person could handle 150 relationships, and that just means just knowing about them, being able to talk with them about relevant topics to their business. If you had, a lot of partners or a lot of advisor client CFOs, potentially that number could be more than 150. Like that 150 could be per advisor level or partner level within your firm.
Yeah, so Dunbar's rule is saying you can maintain 150 relationships or a number right around there. So makes sense. Okay, so let's keep going a little bit, Rachel, and talk about we talked about the transition of that or evolution DBA went through in terms of creating service packages and associated add-ons. I'll bring everything up here at once, but can you talk a little bit about the transition in terms of getting clients into the new service offerings or getting them to the new pricing, existing clients and brand new people?
Yeah, so for existing clients, we were really looking at what were we providing to them, what did we want to provide to them to be able to give them better service, not necessarily just more service, like from a tax return to tax bookkeeping advice, but from the tax return to actual tax savings. What were the steps that we needed to provide? And so getting them into our bundled services looked like, what are they paying us right now on an annual basis versus what are they going to pay us in our, say, current pricing model, and then seeing what is the discrepancy there, right? And how are we going to bridge that gap and communicate the value? And this kind of goes to the question of, how do you help someone who is surprised by that amount? It's showing them the value. So we try to show them value where, if it was penalties and interest that they paid because no one was keeping up with something, if it's fees and charges from bank or credit card because no one's keeping up with their accounting, whatever it might be, it may be cost, it may be a lot of evaluating cost savings. So it may be monthly expenses that they're paying that we know our other clients are paying less for those same types of costs within their business, and giving those recommendations. So it's usually helping the surprise people is showing exactly what's included and then showing them the value. So what are they going to save, or how are they going to be better because they have our services versus maybe like a much lower cost, lower level of service that they were either receiving or looking, maybe they're price shopping. Getting them to market. Again, sometimes we do have to give a temporary discount if it's an existing client. For new clients, they either accept the price or they don't. We can discount the implementation a little bit or not. But new clients, they take all services at the price we say, or we help them find a different provider. For existing clients, we'll help build them up to where we are in market. So we may call it a loyal client discount. We'll put the year or the amount of time that that's available for, and then slowly start decreasing that to get them up to where other, like, new clients would be coming in.
And new clients, one strategy there is being able to discount that implementation fee to help get them in the door.
Mhm.
Okay. So you talked, I'm going to go on here. You talked, or maybe started to tell a story that's related to this slide here, but we've got about 6 minutes or so, Rachel.
Sorry,
But
Ben.
this was some 2022 pricing. I believe this was a vet client for the firm, but they were at package number 2. Was that the mid-tier package at that time?
Yes.
Okay. And that was
Yes. And
$800 a month. Go ahead.
$800 a month. We included their QBO subscription. We included their payroll subscription. I'll say I did not sell this client. That was too low, even if it kind of matched their budget for what they could pay. I will say the good thing about this one was they had the onboarding fee that was 2 times the amount. So now our onboarding fee is always set $7,500. But in the very beginning, onboarding was either 1 month's fee, then we went up to 2 times monthly fee, to where we are now at $7,500 per onboarding.
So here is this for the same client a couple years later, right? So this is where you're breaking things out for them, and you can see things look a little bit different. What's the loyal client discount mean here? What are you showing or representing for the client?
So what we're representing there is that if they signed up today for the same services, they would be at the premier $2,000 per month. But because we started them at such a low monthly fee, we are already doubling their monthly fee here at the 1665, or more than doubling their monthly fee. And so we didn't want to triple that monthly fee all at one time. And so we showed that, and we put 2024 loyal client discount. Most people didn't ask a question. A few said, it says 2024. Does that mean in 2025 it's going away? So it did plant the seed, if you're wondering. It did plant the seed that this was not forever. And a few people asked us. When we did these price increases, the intent was show them all of the services that they're getting, what it costs. If they want to go price shop it with another accounting firm, they can say exactly what they need pricing on and then determine if they want to make a switch over price.
Okay. Let's do our fourth and final poll, Rachel. We just have a few minutes left, everybody. So thank you so much so far. So do you charge a new client onboarding or implementation fee? This is our last question, our last poll. I'll leave the poll up for 10 more seconds.
And onboarding for us includes setting up like their chart of accounts, obtaining a QBO file if they don't have one, reviewing, and any cleanup of their QBO is included. Payroll onboarding could be included in that as well.
Okay, so most folks charging an implementation fee in the room. Okay, that was the last poll, everybody. So Rachel, I'll take this one here. You know, as we sort of begin to recap things or start the recap here, I think one thing that we've learned or would like to impart and is as you think about or as you increase prices, increase them regularly, increase them consistently, something that the DBA firm has learned, something we've learned, you know, as opposed to not increasing prices for a year or maybe longer in some cases, and then coming to the client with a very big price increase, or maybe to them a very big price increase. That I think just feels different. Any other comments there, Rachel?
Yeah, we skipped a year in between, and then we had some pretty large increases for clients. It's probably better to do it every year with a smaller increase each year versus waiting 2 or 3 years and then, you know, the clients looking at, you know, why did I double, triple, quadruple in monthly price? That really gives them the opportunity to start thinking maybe someone else could do this.
Okay, so let's recap our just the pricing strategies that we talked through here. We just talked about the price increase, doing that minimum fee increase consistently each year. Rachel talked a lot about the onboarding fee there, you know, getting the client set up, things like that. You have some wiggle room in terms of needing or wanting to discount that if you want to, you know, if you have to. Building your, you know, your services around the team or as opposed to a single person is an important strategy there. We talked about that pricing calculator a couple times. Just it's a simple calculator, right? Just a few critical, which the few numbers to plug into that to get an idea of where you would want to be on your base pricing package, on your base pricing fee. Taking the time to move legacy clients into your new offerings. Back to the discounts again in terms of the onboarding fee. And then Rachel, you definitely talked about taking tech fees out of those packages, right?
Yeah, perfect.
Okay. Rachel, I'll give this to you in terms of a thought or so to leave folks with. Good animation there, but go ahead, Rachel.
So think about this as a firm owner or as a firm leader. If another owner came into your firm, what is the first thing they would do? So I think a lot of us know things that need to change or that could be better. And pricing a lot of times is that. And so if someone else would come in and immediately increase prices, I would say go ahead and start doing that for yourself. You are worth it. You are worth way more than what you think. And people won't push back like you think they will. If they do, it's a very small percentage.
All right, so just a couple last things, as we tie the loop, everybody, just in terms of what's going on inside of our membership. These are our upcoming member webinars that you can see on the calendar. Some tax season related things here at the end of March and very tail end of April, into some planning, kind of mid-year planning, taking stock of where you are with things and looking ahead. And then June and July, managing your work with Keeper, tax projections, recording and delivering tax return commentary to deliver along with an income tax return. And then in September, growing and hiring for the client CFO role, which is part of the team of 3 in addition to the CSM, client controller, and client CFO. So we've got some good webinars on the calendar. If you're not a member, we'd love to have you as a member. These are the things that we've got on tap in addition to other things as well, but these are some big things that we're working on. Our next general public webinar is at the tail end of March. It's on March 26th. We're talking about time blocking for advisory services. So if you'd like to know a little bit more about us, you can hold your phone up to the screen and scan the QR code, or you can go to collective.cpa and check us out online, learn a little bit more about what we offer inside of our membership. So Rachel, I think that brings us to a close. Thank you very, very much for your expertise, and for Christine, Amy, and Marcus behind the scenes answering questions, and especially for all of you guys. Thanks so much for being with us. The session's over. Have a great rest of the day.
Thanks, y'all.